Good morning, everybody, and welcome to Live Trading Room's daily Forex analysis. Today is Tuesday, the 23rd of January, and it's 30 minutes past 11 in the morning. Let's see how the Forex market is behaving through the index grid of our best and worst dashboard. The yen is in first position after the confirmation of the monetary policy of the Bank of Japan, and it's gaining 2.94% on its currency basket. The yen is followed by the New Zealand dollar, ahead by 1.36%. The US dollar is gaining 0.90%, and the Swiss franc and the euro, respectively, 0.65% and 0.18%. The Canadian dollar is down by 1.20%. The British pound is losing 1.31%, and the Australian dollar comes last, losing 3.55% on its currency basket. The power strength gives us the Australian dollar 100% short and the yen 100% long. We have high percentages on the British pound and New Zealand dollar also, respectively 85% short and 85% long. The best trades so far in the Forex market are Aussie New Zealand dollar losing 0.58% and Aussie yen losing 0.81%. Now let's go to the charts to analyze the majors. Aussie US dollar gave a bearish signal at the breakout of the previous daily low. The market is now correcting upward after a daily low marked on target number 9 of the target geometry at 0.7956. We have in fact a bullish price action at an intraday level and a breakout of the previous high on the H1 timeframe. The pair is still losing 0.55%. We have an RSI below 50 from M15 to the H4 timeframe. We have a monthly and weekly statistical forecast in favor of a bearish continuation. So with a confluent Australian dollar against a 71% long US dollar, we may have a continuation to the downside. The euro dollar is moving in a slight bearish tendency inside the bearish zone of the target geometry. After the intraday low marked at 122.22, the market pulled back and respected the entry level of the target geometry at 122.52. The pair is losing 0.17% and price action is becoming bearish again. In fact, we have a breakout of the previous lows on M15 and M5. The RSI is below 50 on every time frame up to the H1, and we have a statistical confluence which is in favor of a continuation of the current move. So with a 57% short euro against an 85% long US dollar, the market could continue to descend towards the previous daily lows. The cable is also moving in a bearish tendency inside the bearish zone of the target geometry below target number 1. The pair is losing 0.30% and we have the monthly and weekly statistical forecasts which are largely in favor of a possible continuation to the downside. We have an RSI below 50 on every time frame up to the H1, so with a 71% short British pound against an 85% long US dollar, the pair could continue to descend toward the weekly opening at 138.91. Kiwi US dollar is moving in a slight bearish tendency after the false breakout of the previous daily high. We're just below the daily opening at 0.7326 with a bearish price action at a scalping and intraday level and a breakout of the previous lows from M1 to M30. The pair is losing 0.06%. The RSI is turning below 50 on the scalping time frame, and we have a delta single volume which is confluent up to the daily time frame. So should the market close below 0.7317, the pair could continue to descend and reach for the weekly opening at 0.7276. Although we should note that both currencies are very strong on their respective currency baskets, so the daily range could remain limited. US dollar Canada is moving in a bullish tendency, finding resistance at the weekly opening at 124.75. The market is inside the bullish zone of the target geometry just above target number 3, with a bullish price action at a scalping level and a percentage gain of 0.27%. The RSI is still above 50 from M15 to H4. So with an 85% long US dollar against an 85% short Canadian dollar, should the market close above the weekly opening at 124.75, we may have a continuation in direction of the monthly opening at 125.18. Inside trading day on US dollar Swiss franc, as we have an 85% long US dollar against a 71% long Swiss franc. The market tried to attack the previous daily highs, but it started a pullback and it's now moving towards the daily opening with a bearish price action from M1 to H4 and a breakout of the previous lows on the scalping time frames. Right now we have an RSI below 50 on every time frame, and we have an almost confluent delta single volume. So should the market close below the daily opening, we may have a continuation to the downside. The entry level for short position, according to the target geometry, would be 0.9608. Let's close the analysis with US dollar yen, which is moving in a bearish tendency after the Bank of Japan's meeting. The market found support at the weekly opening at 110.53. Should the market break below the intraday low marked on target number 3 of the target geometry, we may have a continuation to the downside with a bearish price action at a scalping and intraday level, a percentage confluence up to the yearly level, in a market which is moving below all the moving averages of the EMA dashboard. We also have an RSI below 50 on every time frame and a confluent delta single volume. So with a confluent yen, we may have a continuation of the bearish move. That's all for today's analysis. Thank you for your attention. Good day and good trading from Live Trading Room Trading Community.